Hi all, this is my first video in my new series, Is Now the Time to Invest. I'm hoping to make this a weekly series where I will be doing a full analysis on companies in my watch list and my investable universe. So please smash that like button, subscribe and hit the notification bell for future videos. In this first video that I will be sharing with you, my analysis will be on Greggs, ticker symbol GRG. Based mainly on the interim report published on the 27th of June this year. Obviously, it's had substantial growth over the last 4 or 5 years, but taking into account COVID, it's put a major strain on the company, which we'll be talking about later on in this video. This will be part one of a two-part series, the second part coming out next week after the third quarter update on the 29th of September. Let's just now let's get through and let's get started. Before we get started, I just want to put a disclaimer out there that this video does not constitute financial advice. Its purpose is to be informative and educational, entertainment, to inspire and motivate people who are interested in long-term investing. It's a lot of my own personal opinions and best ideas, so please do your own research before investing. If necessary, seek advice from a professional advisor. Now let's get started. I based my analysis on the interim report, which was published on the 27th of June. I've used the 4 M's of investing, which are meaning. Am I capable of understanding the business? Warren Buffett would call this his circle of competence. So, first of all, before getting started and looking to invest in Greggs, am I capable of understanding the business? Well, Greggs' basic business is it's a bakery chain which operates stores that sell food on the go, savoury products like bakes, sausage rolls and sweet items through its large portfolio of company-owned stores. It also has franchise stores, which obviously is another source of revenue for it. And obviously with the sales of these items and controlling the costs, it makes a profit. And that's the basic business, a basic business model, very simple to understand. So yes, the answer to that is I understand the business. Mo, does the business have a durable competitive advantage to help it grow over the long term? Durable competitive advantage, has it got something that will make it grow long term? And yes, it has. Greggs has a brand moat. It has a strong brand and is famous for its delicious sausage rolls and loved all over the UK. So, for instance, Greggs has a stronger brand than a normal bakery. It's got a big name. It's known across all the UK. Every major city has a Greggs on every high street, more or less. Every train station, every city centre has a Greggs. So it's got a strong brand moat, and that's probably what's helped it through the COVID situation as a current. Thirdly, management should display honesty, integrity and willing to share long-term plans and have reasonable future growth and earnings expectations. Well, from reading the interim report, Greggs management have shown to be honest with future outlooks. Also, social distancing is in place with realistic forecasts. They have acted swiftly to ensure that they can operate safely through further lockdowns. Putting the safety of staff and customers first, they've invested heavily into PPE and screen protectors. I've been to my local Greggs and what they've put in place is quite substantial. They've got great till screens. They've given shields and masks to their employees. So and they've obviously made sure there's not too many staff on so that they can maintain social distancing. So that they've done that. They've also cut the dividend, which I know a lot of people would be upset about the dividend being cut, but it's to conserve cash. And they've been very astute with the financial situation. And they've took all the management team, higher management team, have took a voluntary pay cut to conserve cash, which, shows to me that they're doing everything they can to get the business through COVID. We'll talk about more of it further later on, but yeah, so that's a tick for the management. Fourthly, margin of safety. Now, once you've got past the first 3, this is the last thing, because obviously if you can't get if you haven't got the first 3, there's no point doing an evaluation on it. I've done a valuation on the company with my own, with my own opinions on the future growth. Look, I advise if you're going to look to invest in the company to do your own valuation on the company. But basically, the margin of safety is what you value the company at, and you divide it by 50%. That gives you a margin of safety, because obviously things can come from far left outfield, like for instance COVID. So you could have done an evaluation on the company, and then COVID comes, and then the value of the company drastically drops overnight or over a short period of time. And that's why the 50% is there, to give you that margin of safety for, obviously, as Charlie Munger would say, the natural vicissitudes of life. My margin of safety price is £10.63, and that's based on my own personal calculations and assumptions of future growth. As I just said, that's what I've used my valuation method, but I've also put in a few like variables, what I think would be future growth, because it's not an exact science. That's what I've come with, where I feel comfortable at the margin safety price at the moment of £10.63. Long term, I think that's a good price, and it, in 10, 15 years time, I think I'll have got a good, good return on my money investing at that price. So the event is basically is a cause of the company going on sale due to a disruption to the business operations in short term that causes the company share price to be mispriced. Now, in this case, COVID-19 is the event, and it's caused us to have a national UK lockdown in March for 3 months, which with every single Greggs store estate, every single store in the Greggs estate closed for 3 months. Now, they didn't have to close, but they felt for their customers and to keep their colleagues and employees safe that they would close all stores and get the stores, and invested heavily in getting the stores ready for social distancing and just making the stores safe to operate, really. So that's the key that I say there. They didn't have to close, but they chose to. It resulted in a second quarter loss of 65 million, obviously, because they had no revenues coming in. They had nothing, So they've sunk to a 65 million pound loss in the second quarter, whereas I think in 2019 they had a 37 million pound profit in the second quarter. They've also drawn upon a 150 million pound Bank of England CCFF scheme to give it more liquidity to help it through the current crisis. So that's more things that the management have done to help the company move forward. So that's the event that I feel is pretty on. In the short term, profits are going to plunge, revenues plunge, profits plunge. They've gone to zero for 3 months, really. So they've also used the furlough scheme to save on wages and big costs like that. So this is the event, but what we got to look for in the event is this event temporary? Is it short term? Can the company get through it and then resume normal growth as it has been? Because it's a high growth company for the last 10 years. It's been doing really well. It's been around for a long time. Obviously, I spoke about the brand earlier, but when you look at the event, is it an event that's going to cripple the company forever and lead to bankruptcy and for burning cash, not being able to recover, or is it a short term blip? Now that's what you've got to decide. I personally think that it's a short-term blip, and when and if, well, more to when Greggs gets through the current crisis and the world recovers from COVID-19, Greggs is well placed to survive and flourish in the long term. So in the short term, there may be a lot of volatility in the price, in the stock price, but in the long term, I think that it's well placed to be a big winner. That said, the stock market price did crash over the last 6 months since the lockdown and the interim report, and that's currently where the price was. Is round about this £11 mark, and at its highs it was at £25 a share. So in January, so this is what it's happened. So the stock market's crashed. But is this a buying opportunity? So it's not far, if you see. The price isn't that far from what I said was the margin of safety price. So what we got to try, if this is only a temporary event, this could be an absolute buying opportunity. that's what we've got to think. That's what you've got to think about. And looking forward on to the next one. So next, I'm going to invert it. So I'm going to look at the bear points of why it's not a great time to invest in it. The first bear point is second lockdown fears. Now, this is the biggest one that I think is putting off a lot of investors from investing their money in this stock at the moment. Is there another lockdown around the corner? Well, COVID cases are increasing in the UK. Is a possibility of a second lockdown. And that puts a lot of people off. Higher debt and depleted cash flow. And obviously, they've had to take on more debt. And they have had a depleted cash flow because they have burnt through some cash because they've still got things to pay. And they have had no, for 3 months, they had no operations, and they're obviously only 72% of the 2019 revenue levels and sales levels, which is still a good sign. That was 72%. I think it was in the third week of operating, which was a good sign, but they're still less, so they're burning through cash a bit quicker. Footfall in stores will remain low while social distancing remains in place. Obviously, they're going to get as many sales through the door. They've got a smaller range, just best sellers at the moment. So as long as social distancing is around, they're going to have, it's going to be harder to get the sales. You can't, people are working from home. Busy city centre stores and railways and airports and stores will remain subdued sales while a lot of still are work from home. So they are looking at, these are the things. So they're going to burn through cash a lot quicker because they've still got rents to pay, still got employees to pay. Now they're still using the furlough scheme and stuff like that. But it is, and they've even said that they might have to lay people off, and it's due to giving the best value to their customers, and that's their main goal. 72%, that's where they're at currently. So burning cash and social distancing. I think these are very short term things, but 6 to 18 months, this is what they could be looking at. So, but the ball points are they survive the COVID-19 and resume with normal growth. So the long-term growth, they're looking to adapt to evening trades. So they can spread out the trade throughout the day. And obviously, people can social distance more. People can come on the evenings, then people can come at lunchtime. People can come in the mornings, and they can extend, and they can probably push a few more sales out and be getting a bit more revenue in. They can also space their staff out so they haven't got too many people working in one section of the day, and they can, that's a good way of looking at it as a good business idea. And obviously, when things do get busier again, the longer they're open, the more revenue they can bring in, the better. So that's good for future growth. Also, they're looking at a digital rewards app, and I'm surprised that a company this size hasn't already got one. But that's obviously going to bring people in, because I know if I got a digital reward, £2 to spend on Greggs sausage rolls, I'd take the £2 reward, and then when I'm in there, I might buy a baguette, I might buy a drink, I might buy some donuts for the kids. It's good stuff like that. Enter strict social distancing. Well, that would help straight away. That would make it much easier for them to get more people in the shops, get them out of the shops, because a lot of people do get put off from going into physical stores with social distancing in place. Greggs has invested heavily in PPE for staff and incorporated social distancing in its stores. It's better prepared to stay open and serve customers in the event of a second national lockdown. Now, what my point was earlier is people put off by buying into this company because they're scared that it's going to have to shut again, and probably would cripple the company if it had to close all its stores again and lose all its revenue and profits and whatever, and burn through cash without any income. But because I think that they've invested so heavily in PPE and screens and till screens and stuff like that, I think that's put them better place to stay open and particularly to probably do okay. I mean, in a lockdown, because people want to, go up to Greggs, get out of the house for a bit, have a walk up to Greggs. Sorry about that, it's just a come up on the video. There'll be more wanting to go out, get a couple of sausage rolls, come back, eat them in your house. So I think if there is another lockdown, Greggs will be able to open. Remember what I pointed out earlier, they didn't have to close in the first lockdown. They chose to get their stores COVID safe, COVID secure, ready. So I do not think they will personally close their stores again. I think they'll resume and they'll keep it open, and they might even do particularly well in a lockdown environment. And the rollout of online click and collect deliveries, and they're doing this with Just Eat, and I think that's a great way to do it, especially in a lockdown situation. You just order your sausage roll, you order your sandwiches, people working from home, they can just click and collect on Just Eat. They can have their pastries and savouries and their lunch delivered to the door. And everyone loves Greggs. Not everyone, but a lot of people love Greggs, and a lot of people in offices use Greggs at lunchtime. So if they're working from home, it's a great way of doing it, and I think it's great for the future. Once they get past COVID, it'll improve growth even exponentially, because you see what Just Eat do with McDonald's. You see all these Mac deliveries and stuff. It's really done a lot for other franchises and other companies, food companies. Takeaways is just exponentially will increase revenues and profits. So that's the long-term growth. Also, they're saying that they only need 80% to break even of 2019 sales levels, and they're currently at 72% on the third week of opening. So I think that looks pretty promising for them to be able to survive and flourish after the COVID-19 situation. So I think there's a lot more bull points than there are bear points for this. And obviously, when they're able to sit in and have coffee with your friends, Greggs will flourish again. The social distancing, they're prepared for the social distancing world and the new world that we're living in, and Just Eat. Also, I've heard that they may be opening drive-through stores, rolling out drive-through stores in the future, which would beneficial greatly in a lockdown environment, where people can just go and get a drive-through Greggs, and I think that would do great. Finally, conclusion to this video, part 1 of this video, because I'll be doing another video, part 2, on the 29th, after the 29th of September, after I've analysed the third quarter update to see how it's going and how it's looking for the future. But my conclusion on this stock is currently hold, and that is just due because I've got a position in Greggs. Even though it's at a good price, I think a relatively good margin of safety price, I just want to see what the third quarter update has on this stock. You never know, it might boom up after that, if they've had promising sales, because I went into my local Greggs the other day and it was still quite busy. So I'm just going to say hold for now, and obviously see how this lockdown and if there's going to be a second lockdown, what the strict rules are going to be. Just hold. And I'm just going to ask, can you please smash that like button, comment, subscribe, and hit the notification bell for future videos. And I'm just going to say thanks for watching the video. I hope you all enjoyed it. I look forward to making future videos for you. Have a nice day.